Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you on the screens the stocks that will be featured in this recording. And if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, a lot to talk about, so let's get right at it. We take a look at the chart of the market. Hopefully, everybody had a great July 4th holiday. You've seen this chart before. I've talked about all these zigzags that have been spot on ever since the February highs. We had this very clean mono wave A, B, and C basically to the downside. Then we hit those April tariff lows, and we had the series of 4 zigzags to the upside. I know the chart's a mess, even with this little bit of a triangle here, just to make it an even more complex zigzag to the upside. It's about as complex as it gets. We had these 4 C wave extensions all converging, something that I've never seen before. 4 C waves all coming in with the same exact price, which was the February highs. So where do we go from here? Well, you know, we've broken to new highs. And because of all those different zigzags, there's a whole lot of fib extensions here, which means that any of these could act as resistance. So I expect it to be a little choppy as we move higher. Where can we go? Well, the AI at the Hub organization, and by the way, if you haven't gotten a copy of the Hub software, you can go directly to hub.com, HUBB.com, get a copy of the software for free. You get free Elliott Wave on there. There is an opportunity to subscribe to the AI signals if you want them, but the software itself, along with the Elliott Wave counts, is free. So this is what it looks like when the AI signals come out. They give you a score. We like to look at scores of 75 or above or goes, so that's why this is gray. If it was 75, it'd be green. And it's telling us that it's a little better than a flip of a coin that we'll see 650 on the S&P. If we get there, then we see what happens. But so far, we're in this extended wave 3. Something else I want to add into the mix. I know that's a busy chart. I don't really like busy charts myself. I like to see clean charts because I like to look at the patterns. But I'm going to make this one even busier because something that I think bears noting is that we have an ascending pennant pattern going on here. You can clearly see that with the movement here as we are moving into the point of the pennant. They're called pennant patterns because it looks like a baseball pennant. I'm more of a triangle fan myself. If you've been watching, you know, but a lot of people look at pennant patterns for breakouts. An ascending pennant pattern, I don't think means any more than an ascending triangle on an upside breakout, but other people feel like that does show a breakout. You know, that President Trump's back out with more tariff stuff. The market seems to be shaking it off pretty much for the most part. Now, we'll wait and see how that plays out with the date being pushed out to August 1st. But I do think this bears watching for some sort of a breakout move. Do we have a big FOMO move, a big breakout to the upside? And that kind of could give us a top where you get the retail traders, the last of the retail traders saying, wow, the market's had new highs, I'm missing out, fear of missing out, FOMO, and they jump in. Or is this where we start to correct and maybe start to create the wave 4? I actually like to know your thoughts. Love for you to leave a comment on where you think the next move is and where the breakout of this pennant is. Is it up or down? Just curious. You can just put up or down on there. Let's do like a kind of a quasi poll of where people think things are going to go. So that's the S&P. Now let's go ahead and look at the bond market, which has been quite interesting of late. We actually had a 30-year bond auction. I'm going to show you TLT, as you know, which is the 20-year. But we had a 30-year bond auction. Rick Santelli of CNBC, who's who I watch for bond information, gave it a C rating. Basically, it was a 4.88% rate, which is right where it was expected, which is unusual. Normally, when the actual auction starts, the price moves based on the bids, bid to cover, how much demand there is, etc. But it stayed right there. And you can see that we've got kind of some indecision here on TLT. And that makes sense because we had this downward zigzag here. When a zigzag completes, the rules state that you likely retrace the C wave. And we had this trend channel here, just old-fashioned technical analysis. We're talking about fancy things like Elliott wave and zigzags, etc. This is just plain old connect the higher highs and higher lows, and you get a trend channel. And we stayed in that trend channel right up to the point, exactly to the point where the C wave became retraced. And now the bond market's trying to figure out where it wants to go. So we broke down, we came up, we tested that lower trend line, and as you can see, prices are down. Remember on TLT, it's prices and yields are inverse. So with prices going down, that means yields and rates are going up today. And we have that Fed meeting. Could the Fed surprise and actually cut in July this month? I'd be a little bit surprised, but I would not be as much surprised as I would have been before, because there are some voting members of the FOMC breaking ranks with Chairman Powell, who seems to be determined to wait until September. But is there enough of the voting members to get a rate cut in July? That could send a breakout move on that S&P channel. So one thing I wanted to show you, in addition to the bond market, you seem to like these. I've been showing you these macro charts. These are from the data scientists at the Hub organization, the same guys that create those AI signals. So if we take a look at these charts, the main thing to look at, to me, is the coloration in the upper left-hand corner. It gives you a coding of what the lines mean. Basically, green means expansion, red means contraction. You can look at the other two, and you can see that we're in an expansionary phase in the markets, and the markets are going higher. And the lower chart, it gives you how so the upper chart is where they're blended. The bottom chart shows you each line individually. And note that where we were getting a little bit of a tick up on the contractionary phase, at least on the macros, and these are a 2-week lag, 2-week lag time on these macros, it's showing you that the expansionary phase is moving up and the contractionary phase is moving back down. Hence the move to new highs in the market. Can that continue? I think that surprises a lot of people that we're actually continuing in expansion. As we look at the next chart, where we get to Fed liquidity, you can see, and I talked about this before, that even though the Fed hasn't started cutting rates, they have multiple weapons in their arsenal for injecting liquidity, and they are injecting liquidity, and that is supportive of the move to the upside. The next chart that I'm going to show you is financial conditions in the markets, which is timely because we're going to start getting next week all the big financial companies, the big banks, et cetera, are going to start reporting earnings for their quarterly earnings. And you can see that there's support there of the market move up as far as general financial conditions. So those are the big macros. I know we talk a lot of technicals here, but those are some interesting big macros that I thought you might want to see. All right, back to the charts here. If we take a look at TNX, that's the 10-year. So this is rates, where TLT is prices, and we'll get a bounce up here when this chart updates. By the way, we are recording this midday on Friday due to travel requirements. So the prices that you're seeing are subject to change by the close, but we'll do it when we can. And so we'll see that 10-year show a little bit of a bounce higher. Wanted to move to the dollar and show you that. I like the action of the dollar here. We started to break that level. I mentioned that I didn't want to lose the dollar. I don't want to see the dollar come down here to 92.5. It might once the Fed does start cutting rates. You could certainly make a case for that. But for now, my comments have been, and I think it's been pretty appropriate. You've seen it on the financial networks, people saying the same thing, that the break of the dollar is actually good for the markets, especially international companies, so the exchange rate, et cetera. And I felt like that's the way it would be viewed initially. But if we start to get way down here, there could be some concern come in to, are we losing the dollar? You're going to see what's going on in crypto space here in just a moment. But moving back to the upside here to test that level of 97.5. I didn't want us to break that. We did. And now we're testing that. Can we get back above that range? I'd be okay if we just stayed right here. As you know, I feel like this is Goldilocks for the dollar. It stays weak enough to where it does help earnings for international companies, but doesn't bring the fear in of is the dollar losing its title of the currency of last resort, or its viewpoint along those lines. And we don't want to see the dollar super strong, because that hurts companies internationally. So I'd be okay if we stay right here in the dollar. We'll see how that plays out. I mentioned the crypto space. That's the big news on this Friday. That's what's moving. We take a look at the chart of BITB. I know some of you like IBIT. You've made those comments clear. I found them both to be very similar. Both have very liquid options. I like to trade options, Elliott wave options. That's what we do at evotrader.com. And you can see this big move just last night in our insiders meeting for alert subscribers at evotrader.com. I mentioned my last comment was watch cryptos tomorrow. Do we get follow through on this breakout? And yeah, that's follow through. Now we're getting a little overbought. I don't like it when things go vertical. We're too far from the 10-day moving average, and we gapped up. So we gapped up vertically. Big separation here. Can we continue this move, or do we need some backing and filling? I'd prefer to see a little bit of backing and filling here. And we've been talking about this kind of thing with the crypto space during our TradeFinder events recently. And if you're not sure what TradeFinder is, you can actually sign up for it using the link on your screen, or you can go to evotrader.com and sign up there. It's free. We do it every Tuesday at 1 p.m. Eastern time, so it's during market hours. We look at the market, what's going on. We look for trade ideas, and we have a live Q&A. And we have a great community. They ask great questions. It's my favorite live event to do each and every week. TradeFinder, love to have you join us and be part of that community. People share ideas, etc. So sign up for TradeFinder if you haven't already. So back to the chart of BITB, and we'll move into Ethereum. I was wondering if Ethereum would participate. It is. Same sort of a gap up. In fact, I've been trying to make this argument, opine, if you will, on whether or not Ethereum may outpace Bitcoin, because it has all this clean space here of no resistance whatsoever up to 25, at least on the ETHW, an Ethereum ETF. So it is participating today. Can it continue and outpace? Again, I wish we didn't get this big gap up. I would have preferred to see a break of resistance and move more in a 45-degree angle and kind of a melt up type thing. There's been lots of chatter on the financial networks on whether or not, and there's a social media aspect on the Hub software as well, too. So if you like to communicate in that kind of an environment regarding President Trump's recent visit to the Middle East and the commitment from the Sovereign Wealth Fund, are they going to be buying cryptos? We don't really know, but you would certainly feel like some of that money is going in there with this move to the upside. So I am still curious as to whether or not Ethereum can outpace Bitcoin. Doesn't seem like it today. They're both moving big, but this has more clean space, although you can make an argument going back to BITB that, well, it has clean air because it's broken resistance. So both of them are in clear air. So perhaps they both take off and run. It's kind of the same scenario that I was asking you over the last few weeks. If we go to the chart of the DIA, would you rather be in the Dow or the S&P? I'm not a big Dow trader, and for full disclosure, I commented on this. I thought this might happen, but I didn't put my money where my mouth was. I didn't trade it. But we had this clean air here where the Dow is lagging, getting near those February highs, like the S&P, the Qs, the other markets were up there, but the Dow wasn't. And where would you rather be? Would you rather trade this to see if the Dow plays catch up as it runs up towards those February highs and catches up to where the S&P, Qs, et cetera, have been? And it did. It went kind of vertically up. As I said, I didn't trade it, but you could see the potential there in the pattern. Or the other alternative they gave you, would you rather trade the Qs, which has an argument as well because it broke those February highs. So it broke to new highs first. It was the first market to break to new highs. So it's in clean air. So lots of clean air here, a lot of racing vernacular being out in front, clean air coming in the engine. Engine performance is better. Tends to work that way in stocks. So we're going through a little consolidation here over the last week, some up and down after breaking that level. But where can that wave 3 go? And I know that there's a lot of people in LA that say stay away from the wave 3 because you don't know where the wave 3 is going to end. Yet everybody agrees it's the strongest of all waves. You probably know by now I love zigzags. And if you have a zigzag within a wave 3, I really feel like you can come up with a pretty good target with the fib extensions on where the wave 3 could end. But there really isn't a zigzag in this wave 3. It's kind of a mono wave move. And that does make it a little more challenging on where things are going to end. If we bring in the DMI here, it's very constructive, as you can see from this arrow here with the ADX moving up. It's getting above 25. We are getting a little bit of a move down on the positive and a slight tick up on the negative. We'll watch that over the next day or two, but that could just be from this consolidation. But the ADX still looks good. The two directional indicators are more responsive to day-to-day movements than the ADX is. It's a little more of a lagging indicator, but there is a challenge here on figuring out where things are going to go. I've been talking about how the retail trader has probably a little bit more power than normal at this point in time, because there's so much money in money markets, $3 trillion. So that's buying power. And the retail trader tends to like the stocks that are featured all the time. They have their favorites. And that's the stocks that have been moving, even though the Dow did play catch up. So if we look at the IWM, we talked about this during TradeFinder as well over the last few weeks. Thought it was going to go up to 220 and test that area of resistance. It did. And I said if it breaks 220, likely to go up to 230. That's where the Wave 5 tap box is, stands for time and price projection. And we're kind of heading that way. Got a little bit above the 10-day moving average yesterday, kind of a nothing day today, at least so far. We'll see where that ends. But I still feel like the IWM is going to get up to 230. That will put it in that tap box, and then we'll have to wait and see if the market still has tolerance for risk. You could make a case that the IWM could power through that and continue in a longer Wave 5 extension if the Fed does finally start cutting rates. The small caps are the most susceptible to interest rates of all the markets, tech too, but more in the small caps. So if the Fed does start cutting rates, that could keep a bid under the IWM. So that'll be real interesting to see. Gold participating today as well. As we look at the GLD, we have this massive triangle. Something is going to happen of significance in gold. Even the move up today is not breaking it out of the triangle. So no breakout yet, but a really nice symmetrical triangle. And then you look down here, I like to look at the ADX in a triangle for a strangle on a very low ADX. Tends to give you an indication. The ADX measures strength of a trend. So a low ADX means there's no strength to the trend, and it implies consolidation. And the lower the ADX goes, the closer you are to breaking out of a triangle type pattern. So with that low ADX, I think gold makes a breakout very soon. Don't get caught up in picking a direction. I know that there's a Wave 5 here. The Wave 4 is still active, though, because it's green. It's not purple, so it's not confirmed yet. It's still the active phase, so we could break lower. It's only a 32% correction, and it's come down to the 50-day moving average, and the moving averages that I look at, 10, 30, and 50, are all kind of converging here towards the point. So I think we're going to see something happen relatively soon in gold as far as a breakout, specifically GLD. Take a look at silver. A little bit different chart here. Notice this move up in the ADX is staying strong. And we talked about this numerous times on the fact that silver has lagged the move in gold. Would it play catch up? And perhaps it is. Perhaps this is starting today. We had this, and there was an AI target. It was 71%, so it didn't even hit the 75. And look how accurate this AI stuff is. So it ran up, went right to the target, and just pegged there for over a month, right at that AI target. So that shows you the cool stuff about the AI forecast. But now we're breaking from that consolidation. So even though it wasn't a triangle, it was a sideways consolidation. I call this the launch pad effect. Growing up on the Space Coast in Florida, when you have a sideways move like this, it's kind of like a launch pad where you're going to get a blast off move. That's what's happening. We're getting this blast off and confirmation from the move yesterday on SLV. So maybe it continues to outpace. This is more of a stair step pattern where you go up, sideways, and up. So really not the zigzag type pattern, more of an old school stair step. If you look at it, I don't want to take the time to draw those out. Perhaps I'll do that next week and we'll see. Let's move to the energy space. Take a look at natural gas. UNG greatly underperforming. The whole energy sector really has been underperforming. It's trying to come back. We did get all the way down into this tap box on the Wave 5 low. Is that the end of it? Well, we're still below the 10-day moving average. It is good if we get back above 15 if you're long or want to be long natural gas. You want to see it back above this resistance level at 15. It acted as support for a while. It was support back in April and then support June and July, broke below it. Now we're testing that level. So if we can close above 15 and get back above the 10-day moving average, maybe we start to get some sort of a bid in natural gas. Again, certainly been lagging the rest of the market, and that could be a place where money goes to rotate. That's what happens when you start to get these extreme valuations like we have in the tech sector. Money looks, where can we go rotate and find some better value? And then on oil, we're staying within that range between that 60 and 80 level that I thought we would spend the majority of the year. Talked about that in our outlook. Kind of felt like that in the beginning of the year back in January. Felt like we'd stay in this range. We are creeping up, and perhaps we're going to go test 80 again. But then OPEC came out and said, yeah, they're going to increase production more than people thought. But that didn't bring oil back down. We had this spike up with the Israel-Iran conflict. That came right back down, but just held the 50-day moving average, and we're creeping up. So maybe we're going to go back up and test that resistance level at 80. We'll keep an eye on that, and then that'll give us a little bit better idea of where things may go from here. Let's take a look at the VIX real quick, then we'll get to stocks of interest. We take a look at the VIX. We are trading down around 15. Pretty interesting that with this move melt up to the market, to the upside, that we aren't breaking below. There's still a little bit of volatility being priced in. We talked about the summer doldrums. We go back to last summer when we stayed right along that 12.5 level. Summer doldrums, because volatility and volume tend to be lower in the summertime because a lot of traders take vacations, they rotate around, so volume dries up a little bit, so does volatility. But on low volume, you can have exaggerated volatility. But in this summertime movement, 15 has been the low, so a little bit elevated from where we were last year, but still lower. Even the Israel-Iran conflict couldn't get us above 22.5. So we'll watch that 15 level. If we break below that, that probably gives some ammunition for the S&P to go up to that 650 target. We'll see that plays out. Looking for stocks of interest as we go to AMD. You guys ask about this, and as a quick reminder, we are giving away one of our free level 3 subscriptions every month this year, just like we did last year. It counts our time strategy, which is a sideways strategy, looks to generate income through calendar spreads, trades like that aren't directionally based. So again, an income-based strategy. Then we have the triangles and the volatility strategy that looks for big breakouts, just like we had here on AMD. I'll show you that in a moment. And then we also have the AI-based impulse strategy. All these have some sort of AI infusion in them, with the impulse being primarily the zigzags within the wave 3. So all you have to do to be registered for the drawing is to be a subscriber to the channel and leave a comment. You do those two things and you're in the drawing. You can go to the website, see it's worth thousands of dollars. So you're giving away one every month this year. So that's what we've been doing. So make sure that you leave a comment under the video. All right, back to the chart of AMD. Just as I mentioned, I do watch look at every one of your comments. I answer them time and travel permitted, but I do read them all each and every week. And you guys asked for AMD. There's one of those triangles right down here. As you know, AMD underperformed at the beginning of the year into last year, all the way down into those April tariff tantrum lows. And then we consolidated into a triangle. Very classic stuff with a wave 5 ending. The wave 5 ends, so you go into a corrective phase, a flat, a zigzag, or a triangle, and then the big breakout here. So where can AMD go from here? We went up, we hit this area around 140, came back, got a little bit above the 10-day moving average, tested that. We're back testing 140 again. And if we can get back above this level here and break above 150, there's not a whole lot in the way of AMD going to 175. I think that could be an eventual target there. I think there's some catch-up being played here in AMD in the tech sector. But we need to get a clean break of this 140 level first. And if we can do that, as I said, I think 175 is in the cards. When we look at the DMI, the ADX is strong, but it is going a bit sideways. And that's why we need to see that break of 140 to give an indication that we do have another leg to go. We also ask about emerging markets. So I thought I'd show you the EEM, kind of flat over the last couple of weeks here. We had a wave 5, but it didn't make it to the tap box yet. So perhaps there's some more upside to go there. Perhaps it's all this tariff stuff. A lot of emerging market companies are in the administration's sight on these tariff letters going out. And if we can start to get some deals done, maybe we get a renewed move higher. We might have to wait closer to that August 1st date before we see a renewed move to the upside. But as long as we're holding above that wave 3 high and above the 10-day moving average, if you're long emerging markets, I don't see any reason to get out. If you're looking to enter them, you probably want to wait and let this wave 5 target get taken out, and then you have room to run up to where that wave 5 target is. NVIDIA, the news this week, closed yesterday, first company to close with over a $4 trillion market cap. How far can NVIDIA go? And that's a really difficult question because, once again, there's not a zigzag here. There's the triangle, the kind of stuff in the volatility portfolio broke out. We had a nice run up. We took out those highs at 150. And I do like this kind of a 45-degree angle move. If I don't like vertical moves, you know what I've said time after time after time, vertical moves, you go vertically up, you oftentimes come vertically back down. I don't like to see too much separation from the 10-day moving average. That indicates overbought. This is very clean in this move here. We're getting up into an area where we're going to get close to the tractor beam effect, the Star Trek nod, where we're going to be seeing that $200 level come into play. That may just draw the stock up to it. Wouldn't be surprised to see it move higher. I wanted to see what was going to happen today. I thought after the news yesterday of the $4 trillion market cap, maybe that would give a little bit of a pause at least. Nope, hasn't happened. So money's still moving into NVIDIA. They're kings, and they're out in front. I wouldn't be surprised to see NVIDIA at 200 in the not too distant future. Apple, probably saw the news there where some activists are starting to call for Tim Cook's head. Feel like he should step down. They should get more of an innovator in charge rather than an operations guy. And, they've just botched all the AI stuff, etc. Actually put a bid under Apple yesterday with even the thought of getting in a different CEO. Coming back down just a little bit, at least at the time of this recording. But if we don't break out of this B wave low, in other words, we don't break below that B wave, because if we do, then we're destined to come back down to the point of the triangle. Those are triangle rules. You break out, come back and test the point of the triangle. You just don't know when. It's like filling a gap. It'll get filled right away, or it can take some time. If we don't break this B wave level here, it's a 50% corrective move, so it's a good strong level. If we can bounce back up here, I do think there's a chance Apple could go up to 225 and fulfill that C wave extension. But we need to keep an eye on where it is right now on Apple's kind of key. Microsoft, not too far behind NVIDIA in the race to 4 trillion. We had a nice wave 3 here. We had that surprise earnings that took it out of the doldrums, kind of like what occurred with AMD, where we were moving down here. And then this brought some people back in to Microsoft, and we're just crawling up that 45-degree angle right along the 10-day moving average. Felt like it was going to hit 500, and then wasn't sure what was going to happen from there. But so far, nice consolidation here. It needs to break that wave 3 high before you get excited about it again. So it's just been kind of pegged over the last week to 2 weeks here at 500. If it can put some distance between it and break that wave 3 high, we could be off and running. But I think you just need to be patient on Microsoft right now. Wait and let it see where it's going to go. Does it need to correct a little bit? Because it really hasn't had much of a corrective move at all since that earnings the beginning of May and where it took off. SMCI I still think is interesting. Some of you guys ask about it periodically. And the reason that I think it's interesting, watching this level, they had all their accounting problems, and that occurred right after the big split. That was terrible timing for them. They seem to have gotten all that taken care of. The company does make money. They are in the AI space, etc. If we can break above 50 on SMCI, I think you have something going. I don't think you do anything right now. You need to watch and let that occur. But I like the consolidation right under the 50 level, staying above the 10-day moving average. If it can break that, then perhaps we can go back and test these February highs up near 60. But once again, it's got to break 50 first. So that's another one that you're just keeping an eye on. Netflix with earnings on the horizon. It's coming down a little bit because the valuation got stretched. I mentioned that. I just couldn't chase this move here. That's why I don't like vertical moves. That's why I like the 45-degree angle move. See what happened here? You go 45 degrees and you get kind of just a sideways correction. You go vertically up and you come vertically back down. That's a perfect illustration of what I was talking about. But what's happening here is some profit taking as people are wondering if their numbers, I mean, Netflix is branching out. They're expanding the business model. They're doing a lot of things right. But did the valuation get a little bit ahead of where the actual numbers are? We'll see when the earnings report comes out. Few people taking some profits right now. I would watch 1200 is what I mentioned before. It's also where the 50-day moving average is. If it can hold that 1200 level, we'll see what happens when the earnings are announced. Tesla, they kind of got on Elon again just when he got out of the Doge, finished that and said he was going to focus on Tesla. Now he's talking about creating this new political party, and that upset people. And we had another move down in Tesla when that news came out, but it's still in this big triangle. We're going to get a big move out of Tesla, I think, with this triangle formation. I have no idea what direction it's going to be, but it's going to be a significant move. You can see the bottom, the mouth of the triangle. That's what you measure for breakouts is 275, upward number around 350. So got about a $75 move coming out of Tesla. We'll just have to wait and see what direction it's going to be. A little bit too expensive to put a strangle on that. So you kind of wait for the directional breakout and then trade that direction. Just know that it could be either way. And then finishing off with Palantir, looks like maybe it's wanting to take another leg to the upside here. We'll see if it can take out this wave 5 high. That's going to be the key. If it can break that wave 5 high, then it might be off and running. We do have a nice zigzag here that I wanted to show you as we wrap things up for this week. Right here, you can see right at the 61.8% level, which means that you could get 100% extension, which is just under 160. So Palantir could have some more move to the upside if, I just want to highlight the word if, it can break out this wave 5 high. Otherwise, the wave 5 could hold. So it is bullish that it came down into this little corridor support that I drew. That's exactly where the B wave was. And now we're turning, and perhaps we can extend that C wave. So keep an eye on that wave 5 high and see if it can go out. If you're long, I don't see any reason to get out. If you're looking for an entry in Palantir, I would wait for that wave 5 to be taken out. You still have a little bit of room to run from there. Thanks for your attention. As always, have a great weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.